Hey, hello everybody. This is Andrew Giovinazzi, Director of Education for OptionPit.com, and we're going to do a little simple VIX curve today. So, first off, what is the VIX? Well, let's just get a curve going. So VIX is the 30-day forward volatility in the SPX between 23 and 37 days for options that have a bid. Now, right now, VIX is 2167. You see here, and that's this green line here. And then what makes the VIX fun and interesting is not just that it's a cash index on implied volatility, looking 30 days forward, but it has all these futures. Each one of the VIX futures is going to settle to the VIX cash on expiration. So for example, on November 20th, the NOV 20 future will settle to VIX cash on Wednesday morning when they post the VRO, which is basically the opening VIX print. So in the meantime, all of the other futures slowly gravitate to wherever VIX is. So right now, with VIX at 21 and let's call it 21 and 3/4, right around there, 2168. Every day that goes by, as long as VIX stays here, the VIX futures are going to gravitate every day just a little bit. Now that doesn't mean VIX cash can't move at all and change how the futures move, but in general, every day VIX futures move a little bit toward the cash, what we call like a gravitational pull. In the case right now, this is prior to the election. This is November 1st. VIX futures are gravitating up. This is also what I would call a flat curve. Basically, a flat VIX curve is here, and I got a thing here for you. We're going to put it in there. Whoops. I want to put it in there, right? A flat VIX curve is basically the market saying, I don't know. And we'll go into what a flat VIX curve is, right? I don't know where VIX is going. I don't know where VIX is going. And generally, Russell Rhodes, who is Dr. VIX, I like his definition. A flat curve, and generally, is when all the futures are within a 1-point band. So right now we have kind of an odd curve in general where all the futures are definitely within a 1-point band here. Between 1990 and 1895, even the back end is 1995, and the cash is much higher. The fact that the cash is higher is called backwardation. That means the VIX, where VIX is now, is above all of the VIX futures. So backwardation if I could spell. This is where VIX cash is above all the futures. And then there's what I call extreme backwardation. Okay. That is the VIX cash is above everything. It's above everything, but each future is higher than the next term future. So generally, when you have this, this is still the market looking for more market movement. And backwardation general just means that, as funny as it sounds, in the short term we expect VIX to go up, but in the long term, VIX to drop. So backwardation is short term VIX up, long term VIX down. A flat curve is, again, I don't know where it's going. Just expect a large move. So expect a larger VIX move. up or down. And that's usually set up by whatever the straddle is in the VIX options. The last thing here is Contango. Now here, let me give you, I just want to give you an example of backwardation, right? So remember the short-term up, long-term VIX down. So on August 5th, so this was, remember we had that huge move a couple of, kind of middle end of summer here. I believe it was that Friday. So you can see this was close to an extreme backwardation, almost, but this was this year, the one that I think of at the most of, right around here. It almost got there, not quite. But it was pretty darn close. So here's the cash up here. So short term, right? Again, short term, the expectation is VIX up, but longer term VIX down. And in about a month, VIX actually went from, it closed about 40, somewhere around there, and it was 14 within 30 days. So again, that shorter term action, you could have, VIX could be bumping up, but the market is looking in general for VIX to be, down in around 30 days at a much lower price. Another example now here of curve number 3, and I'm going to put this up here because this is where VIX is most of the time. It's what we call Contango. And it's basically, it's just the opposite of backwardation, right? Where VIX cash is low, is the lowest number, with all subsequent futures higher. And in general, how VIX trades, right? Short term, VIX is down. But VIX rising long term. So usually what this is, within 30 days, VIX generally gravitates down. That'll be another video just to kind of describe how the SPX vols are in the short term that describe that. But in general, VIX is down short term, but longer term, those futures are going to be up. So let's just pick a nice day here, right, where we're going to see, we had a relative low here. We had, okay, let's go later. Let's go a little later, August, maybe, I don't know, a good example, right around the 20th. So we have August 20th. And again, actually, this was in 2 weeks. This was a massive. So you can see here, the curve lower. Now this was the election. So this is kind of an odd, this whole last couple of months have been odd because of the election. But you can see VIX cash is lower. And then all the futures here. Now the degrees to which, like if cash is really lower, this is still what I would call like kind of flat in the front end. So not, and there was some movement in VIX, extreme movement within a week or so right after this snap is taken here. But again, this is in general a contango where the market is expecting vol to be higher in about a month. And indeed, VIX was higher in a month for sure after the snap was taken. Although short term, like 1, 2, 3 days, VIX not doing very much or actually getting a little softer. So what you have is the basic, like those are 3 basic curve types. The actual shorter term SPX vols, which help inform what the VIX curve is doing, we'll do that in another video. But to give you an idea, I think these are just general guidelines of what to expect when you see the VIX curve in the shape that it is in. And this is Andrew Giovinazzi, Director of Education for OptionPit.com. I hope you enjoyed this video. Like and subscribe. Have a good day.